All right, welcome back, everybody. So it is the 24th now of May. We're getting towards the end of the month, kind of catching up on a lot of the macro information that's out there. June 1st carries a lot of weight. We have a lot of big changes coming to the way money is even supplied, especially in the US and other places around the world with central bank digital currencies. And we're seeing, even here in Canada, we're exploring the possibility and the use case of it. We know that Fed Now for the US is coming out in July, likely. And then we have all the other turmoil that's out there right now around everything from war and threats, and then recession risks. And then, of course, you get into the regular stock market conversations, and the things that are driving that are really just volatile, unpredictable right now. So there's a lot of uncertainty in the market. We're seeing that in the price action here at what appears to be a bit of a local top. I think it's pretty clear. A lot of people see the pattern of the head and shoulders at the top here. Big rush up. We put on some retracement fibs. We get some good targets down below, some that are bullish that still mean well, meaning we can continue the bullish cycle. We just maybe need some time to retrace the steepness and the ferocity that the market kind of came back to us. Now, we've talked about this, and we do this video about 3 times a week here at TradeX, and it's for our paying clients primarily, but we'll put this one up on YouTube. What we're looking at here is likely at least a temporary retracement for Bitcoin. And the way we look at that is through multiple different avenues. And every trader, every successful trader has a slightly different way of doing things. Why? Because nothing works unless it works for you. For me, it's a lot about price action. I want to see a lot of organization within my retracement fibs, with my patterns, with the price action itself, and on a larger scale, a larger time frame. I'm not getting down into the day trading, although a lot of these tools can be used in day trading as well. For me, day trading doesn't fit well. I get a little more anxious. I get more involved. I get thinking too much about it. I'm watching every candle. When I zoom out, I don't have to do those things. And I can actually walk away, detach my emotions from the market. And that's how I look at it. So it may work for you. Some of those points of advice. I love Mark Douglas. He's one of my favorites, and I think kind of one of the leaders in how to visualize your own emotional state as a trader and manage your day-to-day life around this idea of being a professional trader, because you have to have stability personally and emotionally in order to be successful as a trader. So moving on from there, here we go. We measure a head and shoulders by taking it from the peak of the head back to the neckline. The neckline is where the shoulders and the head tend to align, and that's the white line here. If we take this measurement and we put it back from that neckline down, you can see we hit our target down here, about 24 to 23,000. This also aligns with a fib retracement. Fib retracements will often measure a leg of money, or one big impulse, or one section. And for retracement fibs, you're looking for a bullish retracement, ideally the 50, the 0.5, the 0.168. Those are some good bullish retracements. A more complete and thorough retracement is down to the 786. That typically happens in most markets. You'll see it a lot in the stock market and other places. And that completes a full retracement and allows the market to continue on. In crypto, we get a little bit of everything, but fairly typically that 618 or that 50 is your bullish retracement. We get that target by measuring our head and shoulders. Perfect hit right into our range here. Now, what else do you get? When you break a pattern, you often will pull back to it or consolidate around it. We've done both here. And today we're seeing Bitcoin really start pushing down, dragging down the rest of the alts. So you're going to see some setups and some other altcoins here in just a minute. And that's kind of going to reflect what's happening with Bitcoin, because they're driving everything that's happening out there right now. So as we take a look at our retracement fibs, we've got our retracement fibs, we have our pattern, and we have the price action. We're currently consolidating. Consolidating usually continues from the direction that you traveled into it. So we'll take an idea here and say that this was the trajectory. Then we went sideways for a while, and now we're going to go down again. How far down? Well, that measures very, very similarly to let's make that one pink for now, to a regular pattern. So this could be a pendant, this could be a bear flag, or the other way would be a bull flag. And what you're looking for is the measurement coming in. So this leg of money coming into the pattern, and then you measure it coming out of the pattern, And of course, we're right back at the exact same spot. So we have price action, the type of price action on a higher time frame on the daily. We have two patterns set up with a similar target. We have retracement fibs with a similar target. And now we go and look at our moving averages quickly. And this is about all I need. I get all four of those things aligned. And all of a sudden, that 200-day moving average, one of the most important measuring sticks in the crypto market, is right there at that 618. This target is very likely, in my opinion, at 24,600 to that 23,300, probably on the lower end if I'm guessing, but that's the direction of the market right now. So those are our current low time frame targets. You want a little bit more confirmation about what you're doing, go back and look at where they used those things the last time. We used the 200-day moving average as leverage for this bullish leg up. When's the last time we did that? Oh, wait a second. We haven't done that in this bear market. We've been pretty much below it the whole time since we broke back in December of 2021. So this is a really important line for the bulls right now. And if we break that down, we know for sure there are other levels out there. Another measuring stick that I often refer to are the gaps on the futures contracts. We have a very small gap down here, just around 10,000. We do have a gap above us up here around 35,000. And of course, we fixed the Bits Lotto gap. If you remember when the Department of Justice, FBI, and everybody else said, oh, we got a doozy for you. And it turned out to be a bit of a flop. That was where they charged the Bits Lotto exchange and their associated folks. We closed that gap, but then left another one right behind. So the FUD is coming in strong against Binance. We're seeing the regulatory pressures, especially across Europe, but they're resolving pressures. They're creating some black and white structures, and we're really looking forward to having some clarity in the United States to be able to move forward. We're seeing Coinbase really push for those, and of course the FTX collapse and the multitude of other collapses that have happened during this bear market have all kind of pushed for the government to take action. And heading into an election year, it would be nice to have something firm before that happens, but this year is dwindling away very, very quickly. The downside is very possible. I think if we stay bullish, we have to hold that 23,300. And if we break down through there, I think sky's the limit for as low as you can go. We get into a full-on recession or depression, and that $10,000 gap down there is not out of the question. So don't get too excited yet, but right now we're in a bullish structure, higher highs, higher lows, lots of different ways to look at it. And of course, you can look to the traditional markets. Now, I will caution you with the traditional markets, the idea that when the dollar goes up, the DXY, Bitcoin goes down and vice versa, that correlation is not there anymore. It is broken. Do not depend on that. It will work for a day or two here or there, then it won't work for a week, and it just turns itself on and off like a switch. Same goes for the stock market. Just be careful what you're looking for there. Let's hop into some alts here after Ethereum. So Ethereum's kind of doing the same thing. We have some of the same levels, although we don't really have that defined head and shoulders at the top. We do have lower highs. We do have lower lows. We are trending in a bearish direction. Let's throw that on there for a make-believe trend line. Where does that stop? Well, zoom out and find your baseline trend line from the very bottom. All right, we're looking at about that 15 to 1600 sort of area. What else aligns down here? There's your 200-day moving average again. So we're looking at, on the downside, a bullish target here for Ethereum of about 1516. Let's check some retracement fibs. Does anything align with that? Remember, we're looking for a 50 or 618, a 50 or 618. Look at that. 618 again aligns just fine with it. More confirmation that what we're doing here is possibly correct. Now, the market's going to do what it wants. Without risk management, you're going to fail. So just understanding price action and the way that things are likely to head and working off probabilities, that's just one step. The most important part is risk management. And that's a lot of what we teach here at TradeX. Hop into the Discord, free to join us and chat and kind of keep up on things. So you can see some of the top charts we've been watching. One combination here is OP and Arbitrum, kind of relying on them to do the same thing. We did break through the 200-day moving average here, and this is another example of that breakthrough and pullback. And then what comes after that? Of course, the dump. Align that with some retracement fibs, very, very simple stuff. I'm expecting about $1.20, $1.19. We were looking for a bullish push off of the 618 here, but it failed. And we're getting a bearish engulfing here that's pushing us back further. Arbitrum seems to be kind of stuck down here, not able to break out of its downward trend. It's done so fairly well, fairly significantly the first two attempts, and it's failed this third try. So we might be seeing a lower end on Arbitrum. The other thing we wonder about charts like this is when you get these candles left out in the middle of nowhere, it's not a wick necessarily, which would mean thinner order books. But this section of that candle possibly has some order book mismatches by the market makers. And quite often you'll see price action forced back to those locations. It's like a gap on a futures chart, very, very similar. And we call them cleanup candles. All right, so we came out to the top here on Cartesi, and a retracement is often an A, B, and then a C to go lower. Let's see how far down this goes, or if this 786 kind of holds here. Tough one to call. Not looking super good here with the big downturn on the day, but these can wick up very, very quickly, and we can call that a 786 hit and move on with our lives and get back to bullish structure. We don't have to do an ABC. We do see some support below in the 200-day moving average. And looking left, you can see that level there around 15.2 cents or so. That's a pretty reliable level here. Getting above it, we have some strength. Getting below it, not so much. So using that in the moving average, I'm looking for likely this to pull back lower, but I'll optimistically sit there and wait to see if we get the turn. FET failed to come back up to the trend line. They broke through the 200-day moving average, pulled back to it. And we've said this before, you break, you pull back, and get dumped. Main levels I'm watching for here are 18 cents. That's in the short term, that's a 50 retracement. And then long term, we could get back to 13.5 or so. It doesn't have to come retest the trend line there. It was a very condensed trend there, and it looks like we're done with that completely. I'm going to retrace the AI pump that happened. If you weren't with us, that one was a lot of fun to trade. We got a couple big trades out of it, and of course, you know, it went for 1,000%. ICX not looking good. This is one of those ones we said we're waiting for that breakout, but if you get really aggressive, you might be able to corner yourself in there. Not looking great there, just trickling down to the stop loss. We already had this circled as a possibility of stopping us out, coming back to that 200-day moving average. Complete the whole process here, and then work your way out of the trend line, but still trapped below that line. Very, very aggressive trading to be into that before breaking above the trend line. But that's not my cup of tea, but some folks live for that. So Illuvium, we're waiting for them to get into this range outlined in the yellow here. We came back into that lower end of it and said, this is that next opportunity. It hasn't gone anywhere, not looking like it's even going to come back up and challenge yet. Below both moving averages, breaking through the retracement, not much bullish to write home about here. And INJ is one of our other big hitters here. Broke out through the consolidation, pulled back, gave you the opportunity to move in, and we moved in very, very quickly here. If you didn't get in at the start, you got a consolidation for a second chance on the next leg up. And those were not the smallest trades in the world. 80%, even if you took the second entry, and a fair bit more than that off the first one here, about 150%. So still waiting for this to finish. We could call this our ABC, and it might be done, but we failed to break out here. Again, you can see confirming this as the downward trend for now, and we'll see where that ends up going and whether this is the required retracement or if we need to go lower. To lots of room back down to the 200-day moving average. I won't get into it, but Link we watch like a hawk for one reason and one reason only. It is in a range, and it is a very tradable range. Slow trading, you take your time, you work on your entries down here, you work on your sells up here, and in the middle ground, for most people, if you're like me, you just leave it alone. Let it set up again for the next run. Litecoin is big right now. Now, Litecoin has their halving coming up, and there's often a big pump before the Litecoin halving. The question is this already the pump? Is this whole thing the pre-halving pump? Is it done? I want to think that it's still got plenty of time to go. We still have a few months, and usually it wraps up just before the event and kind of starts to dump the price after the initial pump. I think we have time for a pump still. Is it guaranteed? Absolutely not. Anything below the two tops that we already have here, this big box of resistance here, anything below that, in my opinion, is just normal intraday price action, and we'll wait and see. We do have a trend line on the bottom. It's tapped 3 times. We queued this one up as a possible entry, but your percentages here aren't as big as on some of the other altcoins. So you only got about 25%. So maybe you got your capital to safety, which is one of the big things that we teach, and got out of the way, just to leave it alone. We're looking for a retracement back here right now. We're breaking out of that triangle that could have had a slightly larger possibility of breaking to the upside, failed clearly, and we're down around the 200-day moving average. This would be a good spot for support and to pull it back in. And I wouldn't be surprised if we got a decent fib retracement, an exact hit on the 0.5 here on the retracement. That's a very bullish retracement on top of a moving average. Not worth catching a fallen knife here, but that is an aggressive entry there. That's open there for us today. Render, we've been loving Render. 100% if they give us the pullback, and if not, you can see all of the entries we've had and had plenty of opportunity there. A great trading coin if you have access to it. It looks like we completed our retracement for the most part here on VRA, and we're still holding that 618 fairly well. That's a bullish retracement, but what's different? We're below both moving averages. We really don't have very healthy price action or structure here. This actually looks more like a consolidation to move lower. You heard me talk about cleanup candles though. What about the order books on that thing? Market makers might have something to say about that. So if we can get pull our shorts back up and put our shoes on and tie them tight, maybe we can get back up into there and work on a 100% trade. But right now it looks like a consolidation to move lower, so nothing to get too excited about. XRP has been pumping on some observations by legal entities on the interwebs, telling you that it looks like they're guaranteed to win. And that's not true. The SEC doesn't lose in court. They offer some concessions once in a while, but they very rarely actually lose. Now, this case is extreme. The SEC looks like a bunch of buffoons. It's really pathetic, the case that they brought forward against XRP. They were much more effective against other entities. And it, in my mind, looks like XRP should most definitely win their court case. And I do expect Ripple's token XRP here to balloon afterwards. But in the meantime, what do we have? We have a very established downtrend. Nothing to write home about. This could be a really awkward looking bull flag, but I'm not buying it. That's a huge bullish engulfing candle. Let's bring it back down to the 200-day and reset that thing. I'm going to wrap it up there for today. I thank you all for joining us and look forward to maybe doing this once a month or so and just letting you guys into the back end and see what we do here 3 times a week for everybody at TradeX. Take care.